Ladies and gentlemen, welcome back to another video. Today we're going to talk about one of my favorite stocks to sell options on. You probably already know from the title, but if not, you already know because of the context. We're going to contemplate, should I let a put that I sold previously potentially get assigned to me, or should I roll it out a week, make some extra premium, and see if the stock can recover? But before we get started, if you like this kind of content, please consider subscribing. That way you don't miss any videos in the future. Today we're going to look at one of my favorite things to do on a stock, and that is selling a put. In fact, I have a lot of puts that I sold previously that are expiring tomorrow. The market was closed today, so nothing happened, but tomorrow is going to be a big day because as you can see on my screen here, all of these puts that I sold, most of them are in the money. So either the market's going to do really well tomorrow and a lot of my stocks will no longer be in the money, or I'm going to end up rolling a lot of these. And one in particular I want to focus on is this $15 put strike on SoFi. And we're going to look at what my options are in terms of rolling it, and also consider the possibility of me just waiting to see if I get assigned the shares, because that's also something that I would be okay with. Because when you sell puts, you like to do that on stocks that you don't mind owning. And that's the whole point of selling a put, is you get paid to purchase it at a price that you're okay with and you're comfortable with. At least that should be the reason of selling a put. And so comes the question, do I want to potentially get 100 more shares of SoFi? By the way, I have 3,300 currently at $15 a piece, and it's currently at $14.55. Who knows where it will be tomorrow? Or do I want to look at rolling that option? And if I want to roll that option, let's take a look. If I just go a week out, how much more premium I can expect to get. So this one will expire on January 17th. And if we go with the same strike price, the previous one being $15, so the new one will also be $15, you can see the difference in price and the credit that I'll get in terms of extra premium will be $27. So I'll get $27 for waiting an extra 7 days at the same strike price. If I wanted to, I could go past earnings and I could go to January 31st. And here you can see a dramatic change and strike prices, because at $14 now, which is $1 less in strike price, I can get $90 waiting 22 days, but this will be after earnings. So there's some more hesitation there because people are just unsure what earnings is going to do to the underlying stock of SoFi. But if I went with this $14 strike and I went $1 less in strike and waited those 22 days, I could look at making $38 and maybe playing it a little bit more safe. But I think what I'm going to do with this particular one, as long as SoFi doesn't end up being above $15 a share, is actually go with the same strike price just a week out, farther in expiration, and get this $79 or whatever the price is going to be at that time. And this will just add to how much I've made in premium so far this month in SoFi alone. If we go to my spreadsheet, which I use to track all of the options I sell, if you're interested in purchasing it, it will be down below in the description. You can go check it out. Help out the channel and get something useful in return. But what's cool I can do is I can create a view once I've added all of the trades that I made. And we can group by stock tickers, which is really nice because this actually it aggregates everything by stock ticker, as it says. So all of the profit for SoFi is grouped right here. And if we look at all of the profit that I made and hover over every single cell, I made $270 so far this month in premium, and rolling it will just add to that premium. However, the downside is if I don't end up letting the shares become assigned to me, I miss out on the opportunity of trading the wheel on the stock, which is also something I'm very in. Because if I buy it at $15 a share, I buy 100 shares, then I have the potential, if it goes back up above 15, selling a call on that, making some extra premium, maybe that becomes assigned, I sell those shares at a capital gain, and then continue with the cycle. So of course, I'm going to keep you guys posted on what I end up doing tomorrow. Let me know what you're doing tomorrow, if you're going to end up rolling a lot of your positions or if you're already good. And yeah, I'll see you in a future video.